Ever wondered why stock market lingo sounds like an alien language? Well, today we decode it all. The world of investing is rife with terms that might seem cryptic but are actually quite simple. Take bulls and bears, for instance. No, we're not taking a detour into the wild. These are terms that describe market trends. A bull market is like a bull charging forward. It signifies rising prices and investor confidence. On the other hand, a bear market is like a bear hibernating. It represents falling prices and a lack of confidence. Now, blue chip stocks aren't poker chips of a certain color. They're shares from large, well-established companies with a history of reliable performance. Lastly, dividends are your portion of a company's profits, somewhat like your slice of the birthday cake. So now you know, when someone talks about bulls and bears, they're not discussing a nature documentary. Some people think the stock market is a casino. Well, it's not unless you play it that way. Now, let's clear the air. The stock market is not a giant roulette wheel where you throw your money on red or black and hope for the best. It's more like a game of chess, where strategic moves can lead to winning outcomes. Imagine, if you will, a casino, loud, bright, and filled with the sounds of slot machines, laughter, and the clink of coins. Now, imagine a library, quiet, dignified, filled with the rustle of pages and hushed whispers. The stock market is more akin to the latter. It's a place of study, research, and calculated decisions, rather than reckless gambling. You see, when you invest in the stock market, you're buying a piece of a company, not just a lottery ticket. You're becoming a part owner of a business, betting on its future success. It's not about the thrill of the gamble, but the satisfaction of seeing your investment grow over time. Now let's talk risk and reward. Picture this. A man walks into a casino, puts all his money on number 13 on the roulette wheel, and loses it all. Another man, a stock market investor, puts his money into a diversified portfolio of stocks. Now, who do you think sleeps better at night? The stock market investor, of course. Why? Because unlike the gambler, he's not just relying on luck. He's relying on research, analysis, and a diversified investment strategy that spreads his risk across many different stocks. It's not about hitting the jackpot. It's about steadily growing your wealth over time. But here's the fun part. Unlike a casino, where the house always wins, in the stock market, everyone can win. Yes, it's true. With careful planning, patience, and a bit of savvy, you can see your investments grow and prosper. So for those who think the stock market is a game of chance, think again. It's a game of strategy, patience, and smart decisions. It's about investing in the future, not betting on the present. So remember, the stock market is not a slot machine. If you play it smart, you won't need a four-leaf clover. You've probably heard the phrase, buy low, sell high. Sounds simple, right? But it's like telling someone, just don't fall while mountain climbing. Let's think about this. Imagine you're at a farmer's market. You see a vendor selling apples for $1 each. Suddenly, a wild rumor spreads that these are magical apples that can grant a single wish. The price skyrockets to $5 an apple. Would you buy at $5, hoping to sell at $10? Or would you wait for the magic apple craze to die down and prices to drop? This, my friends, is the conundrum of buy low, sell high. The challenge lies in determining what is low and what is high. It's akin to trying to predict the weather 3 weeks from now. You might have some clues, but there's always a chance you could get soaked. Market timing, or the practice of making buy or sell decisions by attempting to predict future market price movements, is a tricky business. It's like trying to win a pie-eating contest, blindfolded. You might get a taste of success, but it's just as likely you'll end up with a face full of blueberry goo. Now, don't get me wrong. Some people do manage to time their buys and sells successfully, but it's more often due to luck than some secret sauce. It's like finding a four-leaf clover in a field of three-leaf imposters. Yes, it's possible, but it's not something you'd want to bet your house on. So how do you navigate this tricky terrain? By being informed, patient, and sticking to your investment strategy. It's like going on a road trip. You wouldn't start driving without checking your map, fuel gauge, and ensuring you have snacks for the journey, right? The same applies to investing. In the end, it's not about getting the timing exactly right. It's about timing the market, not timing the market. After all, even a broken clock is right twice a day. So buying low and selling high is not as easy as it sounds, but hey, neither is juggling flaming torches. Who doesn't like payday? In the stock market, we call it dividends. It's like getting a bonus for being a loyal customer. Now, imagine you're at your favorite coffee shop. You visit so often that the baristas know your name and your usual order. One day, the owner comes up to you and says, "Hey, thanks for being such a loyal customer. Here's a small share of our profits." Wouldn't that be a treat? Well, that's pretty much what dividends are in the stock market. Dividends are a portion of a company's earnings that are paid out to shareholders, essentially its most loyal customers. Companies don't have to pay dividends, but many do as a way of returning wealth back to their shareholders. These payments can be issued as cash payments, as shares of stock, or other property. It's an investor's way of earning income passively, that is, without having to sell their shares of the stock. Here's the fun part. Dividends are usually given as a fixed amount per share. So the more shares you own, the larger the slice of the dividend pie you receive. It's like if our coffee shop owner decides to give you a bigger slice of cake for every cup of coffee you buy. But remember, not all companies dish out dividends. Some might prefer to reinvest their profits back into their business for further growth. It's like our coffee shop owner deciding to use the profits to open up a new location instead of giving out slices of cake. Deciding to invest in dividend-paying stocks or not really depends on your financial goals. If you're looking for an income stream that trickles in without you having to lift a finger, dividends might just be your cup of tea or coffee. So there you have it. Dividends are like the stock market's version of a birthday card with cash inside, except it's not just once a year. Now that we've decoded the stock market's secret language, let's wrap it up. We've embarked on quite the financial safari today, folks. We've navigated through the stock market's jungle, cracking its secret language like Indiana Jones deciphering an ancient code. Remember those stock market terms that used to sound like alien chatter? Now they're as familiar as your morning coffee order. Bull market, bear market, IPO, dividends. We've got them all in our financial vocabulary now. And remember, the stock market isn't a casino, despite the flashing lights and the adrenaline rush. It's more like a roller coaster ride with its ups and downs, twists and turns. But unlike a roller coaster, you're in control. You decide when to get on and when to get off. And if you've paid attention today, you'll know how to make that ride more thrilling and less terrifying. Now let's talk about the cardinal rule of investing. Buy low, sell high. Easy to say, harder to do, right? Like trying to nail a perfect souffle on your first try. But with a dash of patience, a sprinkle of knowledge, and a generous helping of discipline, you'll be whipping up a successful investment strategy in no time. And let's not forget about dividends, the stock market's version of a payday. Who doesn't love a good payday, right? It's like getting a birthday gift from your investments every few months. But remember, not every company hands out these financial goodies. So choose wisely and let your money work for you. Well, that's all for today, folks. We've laughed, we've learned, and hopefully we've leveled up our financial literacy. Investing isn't just for Wall Street wolves or Silicon Valley sharks. It's for anyone with a dream, a dollar, and the determination to make their money grow. So remember, the stock market isn't a casino, buying low and selling high isn't a walk in the park, and dividends are your financial birthday gift. Be sure to subscribe if you find this content valuable. And go on, share this video with a friend or family member who might have thought that the stock market is a casino. Just kidding. Comment down below and let us know if you thought the stock market was like a casino. Happy investing!